and viewers, hello everyone. I hope you are doing great today. And I am here to discuss the economic data release on the UK unemployment rate, which is due in about 14 minutes. So as usually, I am going to comment on the fundamental part of this economic data release, while Thomas and Alexander will then help me with the technical part, and they will tell you about the market reaction and also comment on the possible positive or negative impacts. So yes, let's start. I will just put some charts on the whiteboard. So let us first have a look what happened in the past, and I'll put this chart right here for you to have a look at it. So as we can see from the graph, the unemployment rate has been gradually decreasing over the last 2 years, and the last thing we see is that the unemployment rate fell to 7.4% in October, which was the lowest rate since the year 2009. And yes, as concerns this low level of unemployment rate, then Prime Minister David Cameron also commented on this event that the plan is working, but there is still much work to be done, and the workforce should be larger in order to provide solid economic recovery. But what will happen today? We will then first have a look at the Bloomberg survey of where they gathered 33 estimates for this particular economic data release. So let us have a look at it. So here we can see the top 10 forecasts in this table. And one more thing I want to add. Yes, then here we can also see the survey summary. So we see that in the month of November, the unemployment rate should be at 7.3%, which is already lower than the last month. And we do see that the range of estimate is not that wide, since the lowest estimate stands at 7.2%, while the highest is at 7.5%. And if we look at the top forecast, we see the same range there. But one more thing I could then add is what do our traders think about this event? And yes, today the Dukascopy fundamental analysis contest is asking our traders not really to provide their sentiments on unemployment rate, but on the claimant count change. But it's basically the same thing. So let us have a look what we have there. So here we can see that traders see this event having a rather bullish impact on the Great Britain pound USD currency pair, with 58.7% voting for bullish. Yes, I guess that's all from my side, and I would now like to then invite Thomas to the whiteboard, who will continue with the technical stuff.
Anyway, so hi everyone. I will be presenting. Okay, something is weird going on with my platform. Anyway, we'll try to do my best. So yeah, I will be presenting a possible negative impact trading strategy, and I'll be doing that on the Euro Great Britain pound. In a few seconds, I will say why. Well, first of all, across the board, it's very easy to see that there is rather strong bearish sentiment towards the Great Britain pound in general, and only few pairs show something mildly, how to put it, mildly bullish, right? So therefore, decided to look into such turn of events. So yeah, what we're seeing is that why I chose this pair is because market sentiment is mildly bullish. First of all, euro is expected to appreciate against the Great Britain pound by 54% of traders, And in addition to this, 63% of pending orders in 50 pips range around the current market price are set to go long. In addition to this, we can see that Saxo Bank traders, clients actually have mildly bullish expectations towards the pair as well. And what you're seeing on the whiteboard is Euro Great Britain Pound 1 minute chart, and this line right over here shows when the data is expected to release. Now about the trading strategy itself, well, first of all, to go long on the pair, as worse than expected data is supposed to undermine the trust and overall feasibility of the Great Britain pound and the strength of the Great Britain pound, therefore euro should appreciate against it. So the strategy itself is to go long at the market price, and in my opinion these dips below the 200 bar simple moving average right over here at this gray line are the best time to do so. Stop loss should be put in such case at the daily low at 0.82243, which at the moment is 2 pips below the current market price, and take profit should be set in such case at the daily high at 0.82366. Now this line right over here, it is channel down resistance, which can be seen on 30-minute, 1 and 1 hour chart, and also for, let's say, very immediate, maybe instant reaction might be up till the daily pivot point. So daily high would be something as a medium term, meaning something like 2 to 5 minutes after the release of the data target. So I hope I forgot to look into the technical indicators. Just let me put them on the whiteboard. So yeah, as you can see, we do not see any major turning points predicted by the market by the technical indicators, and actually quite a few. Only the trend indicators actually point in the most shorter horizon, actually pointed for the depreciation of the pair, where everywhere else actually we're seeing rather mixed signals. So in addition, in my opinion, that it is additional indication that we should see a rather strong, rather volatile and really substantial reaction on what and where is going on in the market. So now definitely all from my side. Just to recap, buy at the market, then in such case stop loss at the daily low 0.82243, and take profit at the daily high at 0.82366. So yeah, that being said, I guess I will give floor to my colleague Alexander, which will continue with the rest of the presentation. Alexander, the floor is all yours.
Yes, thank you, Thomas. Hello, everyone. So today we are discussing UK unemployment rate. So actually, as Maya already mentioned, the consensus forecast stands for 7.3%. However, taking into account stronger than expected data from the UK during the last couple of months, I guess there is a very high possibility that UK companies will increase hiring. Therefore, the unemployment rate can take even lower, for example, to 7.2%, moving closer to the threshold announced by the UK Central Bank of 7%. And actually, during the last couple of months, traders were betting whether the Bank of England will start raising rates sooner than expected. And I guess today's report will be a great indicator that what we'll be seeing from Mark Carney and his team during the next policy meeting. So, yeah, the possible positive surprise trading strategy is based on the cable. And to be frankly speaking, that's the first time when neither technical indicators or market sentiment is sending some buy or sell signal. Yeah, and speaking about the market sentiment in particular, As you can see, just 51% of traders are holding long positions, so it is not clearly marked. Meanwhile, the pound is sold or bought in equal amount of equal percentage, while the greenback is bought in 51% of all cases across the board. Speaking about the panic orders, as you can see, almost 55% of them are placed to sell the pair in the 50 pips range, while in a wider 100 pips range, almost 60% of them are placed to sell the pair. So therefore, appreciation can be limited. And when having a look at market sentiment provided by other market participants, also, as you can see, it's not universal, as one and daily fixed traders are selling the cable in vast majority of cases, while Saxo Bank traders are almost 73% of Saxo Bank traders are holding long positions on the pair. So once again, the signal is not universal and cannot be interpreted in one way. And when having a look at technical indicators, also they are not sending just buy or sell signals, with indicators on daily and 10-minute charts being rather bearish, while indicators on 30 minutes, hourly and monthly charts are neutral, and only indicators on the 4-hour and weekly chart are supporting the case of further appreciation of the pair. So now I guess we can proceed to the strategy itself. And when having a look at 1-minute chart, that will be 1-minute chart cable. So the potential positive surprise trading strategy is recommended with the entrance point at the market price, which currently hovers at 164.65, just 4 pips below the 200-minute simple moving average. The potential take profit could be placed at 2 days high and around 4-hour resistance at 164.91. And the stop loss is placed at 164.22. That will be a daily support. So 30 pips will be stop loss and almost the same the same amount of pips to go before take profit is reached. So just 2 minutes left before the neutral is, and as you can see, the pair is appreciating slightly and has already reached 200-minute simple moving average. I forgot to speak about market sentiment with other crosses with the pound, and as Thomas already mentioned, Euro and Great British Pound is bought in 55%. Great British Pound, Aussie and Kiwi are strongly bearish. Pound and Swiss franc cross is sold in 58% of cases, while Pound yen and greenback are bought and sold in almost equal number of times. The initial market reaction, let me check, that will be 62 pips, and obviously the take profit was reached. And I see that the unemployment rate came at 7.1%, even highly stronger than expected, and jobless claims count change also deteriorated. So there were just 24,000 jobless claims. So obviously the cable received a strong bullish impetus, and the pair will be appreciating in the short and medium term, obviously. And once again, the initial market reaction is more than 65 pips. So on the 4-hour chart, as we can see, the pair just breached weekly and daily resistance at 165.14, and the pair is approaching 4-hour resistance, which can be found at 165.39. So that will be the next key level for long traders before the pair will manage to appreciate even higher. So just a couple of pips left before this level is reached. To be more precise, that will be 11 pips. Where to put stop loss now? Well, actually, the take profit could be placed at daily resistance has already set at 165.39, while stop loss, I guess, can be placed around earlier take profit at 164.91. That will be 2 days previous high and daily resistance previously, so 4-hour resistance. Yeah, but I guess taking into account stronger than expected data, then the pair can appreciate even further. And once again, the next stop will be daily resistance at 165.39. So I guess that will be all from my side. Hope that was useful for some of you. And thank you for attention, and giving the floor back to you, Maya.
Yes, thanks a lot, Alexander and Thomas, for helping me out. Dear guests, I do hope that we gave you some useful information. And if you have any kind of comments on this event, you're welcome to share them in the chat section. And in the meantime, I invite you to join our daily research webinar, which is going to be in a bit more than 2 hours. So stay tuned and see you later.